Welcome to Moving Iron with Casey Seymour and Greg Peterson, the podcast for anyone and everyone involved and interested in the business of ag equipment. If you want to understand what trends and market forces are impacting the price of your iron, you've come to the right place. Buckle up, it's time to move some iron.
Hello and welcome to Moving Iron Podcast. I've got Greg and Senior Pete Peterson on to talk about what's happening in the marketplace. This edition of the Moving Iron Podcast is brought to you by John Deere. Greg, how you doing today?
I'm doing well, Casey. How about yourself?
Doing good, man. Doing real good. How's the weather up your way?
7 below air temp. It was 21 below Friday air temp. So I guess the sun. So yeah, it's amazing how warm approaching zero can feel. But how about you guys? Did you get hammered with all this snow and cold the last few days?
We got the cold, man. We got maybe an inch or two of, I don't know if we got 2 inches of snow, but we definitely got the cold. I want to say it was. Well, I think when I left my house Saturday morning, it was -9 air temperature. So I think it warmed up to like -2 or 2 degrees or something like that during the day. So we had plenty of cold come through. But it's supposed to be 55 degrees by the weekend. So
55. Oh man, maybe I can book a flight to Western Nebraska, catch some. I was in Winnipeg last week, Winnipeg, driving to Brandon, speaking at a farm show up there in Manitoba on I think it was Wednesday. And I rented a truck, was driving across, and it was 19 below air temp, but the north wind was just rifling across Canadian Highway 1, driving west. And I don't think there was any cancellations up there. They were just like, hey, it's Wednesday, sun's out, wind's blowing. It's wind chill's 48 below. It's like, hey, welcome to Canada. I was like, this is awesome.
Right. Yeah. Yeah, it's amazing how you look at some areas, you start looking at some of the stuff in the southeast too, when they're not equipped, that's not necessarily something that happens
right
very often, but although it has happened more and more here over the last couple of years, but you see an inch or two of snow and some cold weather come through and it shuts the world down. But I get it because it's you're not equipped for it. But I was talking to a friend of mine that lives down in Florida. It's supposed to be 31 degrees or something like that in North Florida. And I'm like, wow, that's like -20 anywhere else in the winter.
That is. It is.
So, it's amazing.
Here's an old golf story for you, Casey. So sometimes before we hop on the air, we chat about golf. But when I played college golf back in the mid-late 80s, little school in Minnesota, Gustavus Adolphus, we would take a spring trip in January and we'd go south. We went to Arizona one year. We were in Yuma and they had a cold patch. And I mean, it was probably, I don't think it was 31 like you're saying in Florida, but it was, high 40s. So we're out there with our shorts on, maybe a jacket, maybe a sweater or whatever. But the locals in Yuma, they were looking at us like, you northern boys, what are you doing with shorts on? And we're like, hey, we're golfing. We are happy. So it's all relative, I think.
Yeah, it is. Yeah, I've been in Florida before where I walked out of a restaurant and someone said, in February, said, hey, you guys stay warm out there tonight. And it was 48 degrees. I'm like, I'll do my best. Yeah.
Thank you for your concern.
That's going to be a struggle, but I'll do my best.
Yeah. Right.
So yeah, it's all relative.
Yes.
All
right. Kind of like the used machinery market. It's all relative, isn't it?
It's all relative. Yeah. And you had a couple of things pop up on your radar here that you talked about the last couple of weeks. There's a big sell down in Arkansas that had some late model, low hour stuff on there. That was some rice country stuff, and it was interesting to watch what that sold for. So talk a little bit about what you saw down in Arkansas.
Yeah, last Thursday, January 22nd, my friend Kirk Witcher with Witcher Auctions, online farm auction for Hill Farms. Folks maybe saw the YouTube preview. I went down there. We filmed it for our TV show in advance. So we interviewed Seth Hill and his dad, Rocky, and Kirk Witcher, and really, really nice stuff. The Hills had a big poultry operation and livestock, and they'd been rice farming for 10 years, and then they kept getting flooded out like 4 times the last 9 years. And they said, let's just shift. And so they're building big new poultry facilities there. So they're getting out of their equipment, and it was very low hour, Casey, and I thought sale was terrific. Continued the trend, definitely, we've been seeing since November, that little lift, good condition used equipment. So here again, down in Arkansas, The lead tractor was a 23 model Case IH Steiger 470 quad track. Only had 73 hours on it, and its whole hammer price was $418. And then you tack on, I think it's 3% or something. It was like $430,540. And so that's the second highest auction price I've ever seen on a 470 quad. But more interesting to me was the fact that Seth Hill, the owner, texted me Friday morning, and he's like, Pete, wow, we're just over the moon happy with the sale. And he showed me the contract. They paid for that tractor new. They paid $415. So now it's just, 2 to 3 years old now, still low hours, but it goes for $430 and a half. And auctioneer Kirk Witcher, Kirk's great. He's as sharp as they come. He texted me Thursday night as the sale was unfolding, and he's like, Pete, we just blew past our appraisal. And so, again, indicative of the trend we've been seeing across the board. A couple other highlights, Casey. They had an 8R 370, so they had red and green. That was a 21 model, just under 1,000 hours, went for $321, $360. So that was pretty solid. Combine, maybe kind of more in line. That was a 21 model Case IH 8250, 658 hours. Nice machine. That did $221,965. But across the board, very, very strong sale.
Yeah. Yeah, you're watching that stuff through there. There they had a Case air seeder, right?
Yeah, before, a 24 model 550T Case IH, never used. They bought it, got flooded out last year, didn't plant rice. And that came in at $208,575 on that one.
Do you know how big a air seeder that was?
It was 40 foot.
40 foot. Got it. Yeah, that's you see some of that stuff through like that, and that kind of scenario again is you don't see that stuff very often, but when you watch that stuff play out, it does point to if it was a depressed marketplace, I think you wouldn't see what happened, some of that stuff that had happened there. And again, there's folks out there looking for an alternative, right? And what's that alternative look like? And how can we find that alternative? And we start looking at 3-year-old equipment, which we've talked about that quite a bit on here. When you're looking at a lot of the stuff that you see unfold, a lot of the equipment that we see out there that's being sought after right now falls into that 3 to 5 year old marketplace. And because of, just like you said, 418,000 or 430,000, sorry, comparatively to what it would cost in 2023, which was 415,000.
Yep.
That same machine today, you raffle that thing forward a little bit, it's probably close to 500,000 today.
Right.
You start working your way through that. So as you start putting those pieces together, that idea of having something come out there that's got some years and some age on it, and especially when you start looking at the hours associated with it, those things all point towards folks trying to find that alternative. And if you go start looking at what's coming off the marketplace, it's that 3 to 5 year old equipment. The rest of the stuff, it's kind of hit or miss as to what's going on. But that 3 to 5 year old market, especially since all December and here we are all of January, that's the biggest segment of machines that have been coming off. And we're talking in spades, not just onesie twosie stuff, but across the board, you're seeing a solid amount of machines come off the marketplace.
Yeah, and we saw the next night, Casey, Friday evening this last week, so that'd have been the 23rd of January. We hop over to Georgia, Fort Valley, Georgia. Our friends Rich and Rich auctioneers had a super nice farm auction. You and I are friends with Bryant Roberson, Rich and Rich, and Bryant has made a big push into the state of Georgia. So Rich and Rich now expanding their footprint. But they had a farm sale for Malcolm and Leslie Giles. And what people were talking about and what I posted about Saturday morning was the 4255 Deere, 92 model 2-wheel drive. So, 3,220 original hours, it's going to be a hot one, but about $63,000 and out of Georgia. So very strong there. But that same sale had a pair of 22 model 8R 410s. And the hours, the 948 and 810. And they went for $346 and a quarter and $340,500. Now, if you go to machinerypete.com, hop into the free auction data and do an average on just the 22 model 8R 410s. Last year, the average was just under $324,700. And so here you go, you flip the calendar, and these were nice, but again, 948, 810 hours, and they're 346 and 340. So there's that little bump compared to last year that we're talking about. And one other tractor on the sale, Casey, it's not just the crazy low hour stuff. If it's, to me, I mean, I've seen this before, but it's really accentuated right now. If it's good condition, even if it's higher hour, it's ringing the bell. So on that same Georgia sale Friday, they had a 7930 Deere. Now, no loader. It had 9,591 hours on it. Just, good solid tractor, but, pushing 10K hours. Brought $55,005. Now, again, same thing. You go into our auction prices and you do a filter. That's the second highest auction price ever on a 7930 with over 9,000 hours and no loader. And so those are just data points. They're coming in. Farmers are voting with their checkbook. And by the way, that back to Arkansas, that 470 quad track, that went to South Dakota. So again, that's kind of the market right now.
Yeah. Well, it also shows you too, when you start looking at where this stuff's coming from and where it goes and those kind of things, is that the regionality of equipment, if there's a deal to be had out there, someone's going to find that deal. They're going to get it and take it back to where they want to go. Exactly. Which all comes back to making sure that what you have listed on when you're out advertising a piece of equipment, that you have good, solid information about what it is that you got. Because, like you said, Arkansas and South Dakota, there's a lot of quad tracks in between Arkansas and South Dakota. Now, maybe not with 73 hours on them, but I'm just saying, there's plenty to pick from between there and now, and that should paint a picture for you of how important it is to justify why you should be looking at my piece of equipment or somebody else.
Yeah, Kirk Witcher, when we went down 2 weeks ago to film in advance for our TV show, because this was an online sale. And when we were down there, Ty Morgan, my good friend with U.S. Farm Report, said, Greg, can you do an interview with Kirk, kind of getting his take down in the Delta there on his take on the market. So when Kirk did we were interviewing him, he, in a humble way, was just saying, it's about good condition equipment. The price of new is very high, and it matters a lot how you market this stuff. So when we were down there, I think and we talk about this a lot, but to me, it's just becoming more and more important. So when you have something for sale, as an owner, what we're doing right here is becoming more important. So when we framed up Seth in front of his 470 quad, and I just said, dude, why has this thing got 73 hours on it? And he just says, Pete, well, here's why. We Northeast Arkansas, we got 3 rivers right here around Pocahontas. We got flooded out last year, 4 of the last 9. We bought this thing, just didn't use it. And then you go on down the line, and he says, we're moving out of rice. We've just kind of had enough. We're investing on the poultry side. So, and Seth is just a farmer, but he comes across, like my experience is really all farmers do. You get up our way, you're in Nebraska, I'm Minnesota, farmers tend to be a little more reserved than down south. That's just kind of how we are. But when you get them talking about your equipment, like, hey, Joe, tell me about your whatever. It doesn't matter what it is. With these tools we have now, these screens, which drive us nuts a lot of times. But when you're marketing something for sale, you really, really have to utilize that. And frankly, if you don't utilize those tools and work with auction companies that utilize that, your sale prices, they just aren't going to be as high as they could be. That's just plain simple truth.
Yep. Yeah. And, we talked about that a lot. It's making sure you got the right information in front of the right people so they can make that judgment call. That's what you're going to do.
By the way, our friend Bryant there down in Georgia Friday, the exact same thing with Rich and Rich, putting forward all kinds of great continual promotions. It's not enough anymore just to say, hey, we got a sale coming up in 2 weeks. You really have to look, and it's twofold. It's smart business for an auction company, because when we go down and talk with Kirk or Bryant, their personalities come through, or Jason Aycock down in North Carolina, same thing with his sale. He promoted it same way on Saturday. I guess I haven't mentioned that one, but another sale in Kingston, North Carolina that sold really well Saturday. Same thing. Jason promoted the heck out of it. And then you appeal, you extend your reach as an auction company, you establish trust, and you find buyers who aren't necessarily in your neighborhood.
Yep. Well, I'm sure the guy that bought that tractor in South Dakota wasn't in Arkansas when he bought it, right? He was probably looking at it online and was bidding on it online and had the information that he needed to make that happen. And I think that's the key factor here. It's just, you're opening, the internet's made it really easy to go out and buy a piece of equipment. It's also made it really easy to buy a piece of crap too, right? And I think that's the thing that's here. Like, if there's any kind of hesitation about what it is or isn't, right? I've always had this kind of theory that when the internet guys stop bidding and the internet guys stop bidding, but the guys on the ground are still bidding, they know something that the internet guys, and vice versa.
Right.
Guys on the ground stop bidding, the internet guys take out road. The guys on the ground see something that the internet guys can't see, right?
That's very true.
That kind of, I've always been like, why is the internet guy still bidding when he's fighting against the internet? The guy on the ground stop. Now, that doesn't mean they could be outside their budget. There's a lot of things that you could point out, but I also think it's also pointing towards, these guys don't see the condition that I see, or they don't know this, or they don't know that. And it's one of those things where they kind of have that. They have a little, that's why it's important to make sure those videos and stuff like you're talking about doing are out there for people to see.
Yeah, so really great comment there, Casey. That's been the truth, since online bidding has started, I've noticed. And it's interesting. So Seth, the farmer down in Pocahontas, Arkansas with his dad, he when he texted me about the quad, they said, hey, Pete, we paid $415 and it brought $430. We're over the moon. He also relayed to me, he said, Greg, can we do more videos after the auction? Because Seth is a people person, as a farmer, and he got so much outreach after we did those preview videos and all the Kirk's promotion. He said he enjoyed so much talking to farmers from all over. And one of the themes he was getting at was, they're kind of trying to save a few dollars. That you have like new equipment that's a couple of years old, but they wanted to talk to the owner, which is super smart. Just get the owner to, I always used to advise that, just call the seller, get them talking, and then, start talking about football or Husker basketball, whatever. And then eventually you're going to get a take on this guy or gal that's going to either add to your confidence level in bidding or detract from it. And in Seth's case, it all adds up. That equipment was so nice. Everything fit. They like Seth. So now you just start drifting into the old truth. When I used to cover auctions before the internet, go to local farm sale, retirement, or estate sale, you get say it was a Casey Seymour auction, you get a Casey premium because Casey's a great farmer, takes great care of his stuff. We like Casey, we respect him. So all Casey stuff would sell a little bit higher. And that's what we're talking about here, is now transferring that level of trust 10 states away. And so to the auction companies, and frankly, again, if I were dealers, to me, huge opportunity. So whatever's on your used lot, to whatever extent possible, it shouldn't just be anecdotal about, I've got those 3 cotton strippers I got out there, or those 3 combines, or whatever. Somehow in the listing, you need to bring forward the history on that piece. When you have something that's off a really good farm. And again, what the truth there, of course, is at the dealer level, I suppose, when you would take something in on trade from a certain farmer, a top level guy, that stuff was probably already sold because everyone knows that this is John's. And I just see opportunity on the retail side to paint a better picture of the things you're selling with more bits of information like this. Now, easy for me to say, I'm not a dealer, but some dealers are going to figure it out, and they're going to put more video truth, even if it's the salesman talking about, I took this in on trade from a third generation customer of ours, and they farm over the hills over there. Just talk about it. Because when you talk about it, what you're trying to do is establish trust. So not only for the one piece you're representing there, but I also think about what is it worth for a dealership if you can get people from 4, 5, 6 states away connected to your salesperson or your general manager. I like the way that guy talks about, or that gal talks about this stuff. What is that worth long term? I mean, that's off the charts.
Yeah, no, I think the video side of it is really important. It's not so much the figure eight they do out in the parking lot to show that it works. It's the store behind it. And if you're asking someone to pay, $500,000 for something, or $400,000 for something, or whatever the number is, that you're $185,000 for a loader tractor, whatever that number might be, you need to have a good reason for them to do that. And that's I think that's the storytelling part of it.
I think you can even engage it on the other side of condition. So say you got something that's a piece of fill in the blank. Just call it what it is. Even have fun with it. Go out and show, look at the issues on this thing. Look at this. Oh my gosh, this is just beat to hell. And it's priced as such. Now, again, you'd say, well, why would we ever advertise something that's all, again, this goes back to me. I've said it a lot, but when I was a kid growing up and my dad had 2 stores as a dealer in Western Minnesota, the business to me was not selling new equipment. The business was the relationship with the customer, the farmer, and that trust. So stuff happens sometimes, mistakes, whatever, but, making it right, calling it what it is as best you can. And if you take a long-term view to it, once you establish that level of this is who we are, this is how we roll, and now we have these new tools. My dad was doing it back in an age when everything was local, but still did it for the right reason. That was who he was. But that to me was the farm equipment business, was the relationships. And especially right now when there's stress all across our space. On the farm side, there's stress. On the dealer side, there's stress. Good times for auction companies, I guess, but all the more reason to be real with your customers and use a difficult time like this to establish more trust that will benefit you 5, 10, 15 years down the road. But that's just long-term thinking the way I look at it. But I get excited about these tools because at bottom line, Casey, I see, like when we were in Arkansas and did all that video storytelling, I see, look what it's sold for. It's not very complicated. There's opportunities are there if we lean into them.
Yep, for sure. Yep, a lot of tools out there, a lot of ways to continue to do the research that you need to do. And it seems like every time there's something new pops up. So there's no lack of information out there to figure out what a piece of equipment is worth. So good place to stop, Greg. Folks want to reach out to you, get some more information about where you're going to be at or how to get you to one of their auctions. What's the best way to do that?
Yeah, just hit our website, machinerypete.com, folks. The little contact button on the bottom. Or, just hit me on Facebook or Twitter is a great place. Send me a message on Twitter, Instagram. And, yeah, love to visit with you.
Right on. Well, Greg, we appreciate you being on the podcast. We'll catch you again next week.
Sounds great. Have a good week, Casey.
You too. Stay tuned for more Moving Iron podcasts after these messages.
Looking for more accuracy, more productivity from your current planter? Let's get exact with precision upgrades from John Deere. Start with Exact Emerge and get accurate singulation and spacing at 10 miles per hour. Or choose Exact Shot to promote early root growth and cut fertilizer costs. And with Furrow Vision, save time by verifying seed depth right from your cab. Visit johndeere.com/planter upgrades and see why nothing runs like a Deere.
All right, welcome back to Moving Iron Podcast Markets. I got Sean Hackett back on to talk about what's happening in the marketplace. Sean is with Hackett Financial out of Boca Raton, Florida, and he's nice enough to come on and talk about what's happening in the world of commodities. Sean, how you doing this morning?
I'm doing pretty good for Florida standards. We're in the 40s, which is pretty chilly, and we're going to be going into the mid-upper 30s here over the weekend, which is about as cold as it ever gets here. So not that anyone is going to be feeling bad about my situation, because they're going to be looking at minuses and wind chills and such. But nonetheless, it just shows you how extensive the cold is to come all the way down to South Florida here in Boca, where it almost never does. It's pretty significant. So,
yeah. Well, I saw the flannel shirt. So I didn't know if you're getting the band back together for your '90s grunge band, or if it was that cold in Florida.
It's hunt weather. It's hunt weather.
There you go.
We're gonna go do some pig hunting in the swamps.
There you go. Yeah. Well, let's talk a little bit about what's going on the currency side of things for a while. The U.S. dollar's been, you've seen it take some hits, which typically opens the doors to some exports. You've seen some moves in the Chinese dollar as well as the real. So as you're looking at this stuff, Sean, you follow this stuff. So if you're looking at this stuff right now, what's the stuff telling you?
Generally speaking, in order to have a sustainable inflationary move in U.S. priced commodities, you almost always need a change in the capital flows away from the U.S. dollar and into foreign currencies. The last time we really saw a sea change in the dollar, what I think might be happening here, was 2002. That's when the Brazilian real broke out to the upside, and actually went on a 10-year rise before topping out in 2012. And it's been on the and then the Chinese renminbi did the same thing. There's other factors, obviously. It's just not the currency. I mean, obviously, you still have to have supply, demand, and other. It doesn't say how much the commodities will go up. Some will go up a lot, some will go up less, but they all will go up. And what it seems to me, Casey, is if you look at the Brazilian real, which since 2012 declined all the way into 2020, and then it's been going sideways since 2020, and we are breaking out of this long-term sideways trading base. And the renminbi, the Chinese currency, is doing the same thing. And if you look at the U.S. dollar index, we broke through triple bottom support here yesterday. Any follow through, and we could be looking at a significant change in currency structure, which would favor higher U.S. price commodities, make the U.S. far more competitive to its trading partners. And for the first time, really, since 2002 to 2012, we could actually gain a competitive price advantage on Brazil, who's been eating our lunch, not only because of the currency, but also because of their willingness to continue to add planted acres, especially for soybeans. So this is significant, I think, what happened yesterday. And, the precious metals have sort of been sniffing this out, as they always do, well in advance. They go up first, well before other commodities start to figure it out. And then what happens is when the market then realizes that we're in this sea change in currencies, then there's a rotation out of precious metals into energies and agricultural, especially the grains. And then these precious metals underperform for the next few years. So we think we're about ready to switch over from an outperformance of precious metals to an outperformance of energies and grains. And if you look at crude oil, for example, very, very quietly, it's moved from $54 almost to $61, $62, which still low prices, by the way. But I mean, we're starting to see the market going up. And obviously natural gas prices on the spot price doubled in 3 trading days because the weather models finally said, oh crap, it's going to get cold out there. So things are changing. Things are changing. And what's very interesting is if you look at the corn price is removed half of the decline we saw on that Monday when the USDA report came out and they put out their ridiculous spreadsheet of what they think the corn supplies were. We've already given half of that back, meaning we've rallied half of that decline already, suggesting that the market is calling the USDA's bluff. And on top of it, the currency situation helps improve the bid in the market, the competitiveness in the market. So I'm really constructive here that we're looking at some very, very important bottoms in energies and grain markets with bearishness that got just about as one-sided as we've ever seen. So,
yeah, okay, all right. So let's talk a little bit about what you see happening right now. We touched on this a little bit beforehand, but you get this cold coming through. I watched Trading Spaces the other day, so you got to talk about orange juice here. So, if you're looking at the orange juice market right now, Florida's not the player that it used to be. But as you look at what's going on in the orange juice market right now, what is some stuff you're paying attention to?
Well, the big issue, there's 3 main issues for the orange juice market. One is that U.S. demand has been declining for decades. People moving away from consumption of orange juice. And that can, and of course, when we had the big price rise, we tripled the price, quadrupled the price, pentupled the price from low to high on all the hurricanes that we had here in the U.S., citrus greening we had here in the U.S. And of course, for people have to also remember that they also have citrus greening in Brazil, the number one producer in the world and number one exporter in the world. 49% of the groves in Brazil now are suffering some form of citrus greening disease issues. So you have constricting supply and constricting demand. And so what happened was supply came down so fast that even though demand was declining, you had a shortage. And then what's happened is production has sort of stabilized as demand has continued to fall. And now we have too much orange juice supply. While there could be a reaction in the futures market, Casey, on a frost that we think is likely this weekend in Florida, we produce, so just to give you an idea, we used to produce 700 to 800 million boxes of orange juice or gallons of orange juice, like 15, 20 years ago. At the low a few years back, we did like 20. I mean, it almost went to zero, practically went to zero. So if there is a rally, we don't think it's going to be long-lived just because our production just really isn't that important anymore. But nonetheless, if you're producing oranges or you're producing, grapefruits or anything in the citrus area whatsoever that don't have a futures market, of course, it's going to be quite unpleasant, I think, with the damage that's going to be done here this weekend. And I do think the market in oranges would react a little bit, just because I just think speculators would just react to that for a little while. But I don't think it will have the kind of sting to it on the price side that it used to have, I guess is the point I'm trying to make.
Okay. All right. So I've been wanting to ask you this question for a while, since JFK Jr., they inverted the food pyramid, right? So what used to be the most stuff you should have is now on the bottom, and the upside down, more meats, more fats, those kind of things, down to all the way down to less grains. There's a new GLP-1 pill out there, so that's not, the Ozempic thing, it's like all those different things. Like, that's going to change things a little bit because the price of what's associated with the pill versus the injections and so on and so forth. With all those things in play, obviously the United States is consumer-wise, they've started changing their diet for this is like this not just happened the last couple of weeks. This has been over the last probably decade. Slowly have been changing their eating habits and the food they're buying. Looking what's happening now, Sean, when you kind of look at your crystal ball and you look way out, how do you think this sets up supply and demand, consumption, demand at the grocery store type stuff? Like, as you look out there, what are you seeing?
People have come to understand that what we were taught as a kid in terms of what was deemed to be good nutrition was wrong. And not just a little wrong, like a lot wrong. Yeah. And that we're actually eating very, very unhealthy. And that what the body really, really needs is substantially more protein. Whether you get that in terms of milk powder protein, or you get it through high protein legumes or high protein fruits, or eating more beef or chicken, more protein consumption increases muscle mass, reduces caloric consumption, reduces fat. And if you work out at all, it makes you more of a fit person, generally speaking. And so I think what JFK and the government is doing is making it clear to what many people already have sort of figured out, that, we need to be eating more protein, that there's a deficiency in this country in protein consumption. And that, and so obviously anything that the government comes out with that communicates with more people about this, the more consumption is going to go up. There's no question. There's a correlation between when the government says something, especially if it makes any sense at all, the masses will do more of it. That's the first thing. Second thing is that these GLP-1 weight loss drugs that primarily had been utilized in the past to help people with diabetes have found to be very, really good in reducing people's weight. And so all these drugs, got approved like a year and a half ago, something like that. But they were injectables. You actually had to physically inject yourself. I don't know a whole lot of people that are very excited about doing that. Now, it doesn't mean people won't do that, but generally speaking, some people just will not give themselves injection, even if they think it could help them. Secondly, the insurance wasn't covering it for a long time, and it was costing $1,500 a month to do this, which means only fairly well-off people could afford to do this. 12% of the 60 million Americans that are deemed to be in the overweight sphere that would have an interest in these GLP-1 drugs, 12% of that group were willing to take an injection. And now that a pill form has been approved, and there should be a couple of more different pills from different companies approved here in the next, let's say 3 to 6 months, taking a pill that costs now a couple of $100s that now the insurance companies are covering a good portion of means the masses of that 60 million are going to be able to take this drug. The fear of the injection's gone away, and obviously the cost has dropped down to something much more manageable. We know that if you think this through, all the research says so far is when you take these drugs, you lose all your appetite for salty, sugary, snacky, processed foods. You reduce your desire for sodas, sugary drinks, and you reduce the desire to drink alcohol just drops off a cliff. In fact, there's studies that are being done. Studies are being done that this could actually help alcoholism potentially, and that's all good. What we're finding, however, is that when you take these drugs, 20 to 25%, there's a 20 to 25% reduction in caloric intake, which is kind of negative, meaning you're eating less food. But, and you're losing 10 to 15% body weight, which is good. I mean, obviously, if you're overweight or you think you're overweight or whatever, and you lose some weight, everyone knows a little less weight is, generally speaking, means you're likely to be a little healthier. The problem we're finding, however, is it's just not, those are losing the 10 to 15%. It's not just fat. They're losing fat and muscle. And in many cases, they're losing more weight from the muscle than losing from the fat, meaning that, yes, you're losing weight, but you're actually wasting, you're losing muscle mass. And it's known that if you reduce your body weight through loss of muscle mass, not fat loss, you're actually less healthy. What's going on is because people are reducing their intake, but they're not consuming enough protein to keep the muscles strong from the lower caloric intake. The body sends a signal, says, hey, wait a minute, this is not good. We need to consume more protein. So there's a strong urge from these people that are taking these drugs to increase their protein consumption naturally to maintain their muscle mass. The other thing is that, I think a lot of people have this conception that you could just pop these pills and sit in front of your TV every day and you're going to be a healthier person. And actually, that's not true. You do need to do something where you move your body, to move your muscles, to work your muscles, to actually build those muscles, to take advantage of the weight loss and the protein. Meaning, just popping pills and not doing anything isn't really the solution. It doesn't mean you got to go hardcore, 5 hours a day, but you got to move your body, 20 minutes a day to keep those muscles healthy. So what it all means is that while there's a dramatic reduction in alcohol and soda and snack type foods, McDonald's, and we've seen sales collapse for these companies across the board, there's a significant increase consumption in proteins, especially meat proteins. And now that a pill form is available, Asia and Europe are now going to be able to adopt these because more readily because of the price point. And so I think we're going to see a renaissance take place in protein consumption. And like I said, we've already seen that trend developing, but I think it could accelerate. Now the issue is who are going to, that 12% are very wealthy people taking it, okay? But the next market share are going to be a bunch of people that are in the middle or lower socioeconomic background. They're not likely going to be very excited about eating a lot of beef with the price point that is currently afforded to them, given their budgets. They're going to be looking for cheaper meat proteins like chicken and pork. And so we believe chicken and pork, from where we stand today, especially pork, is going to be the poster child for this trend of dramatic changes in habits and diets as everyone looks to increase their protein consumption and tries to do it without breaking the bank and breaking their budget. So last time I checked, pigs and cattle and dairy that produces dry whey and milk powder that are high, they're very, very popular in these protein drinks and such forth and so on. Last time I checked, we feed them a hell of a lot of corn, and we feed them a hell of a lot of bean meal, and we feed them a hell of a lot of feed wheat, meaning that the feed demand that's going to be required domestically and internationally for feed grains is going to go substantially higher. We're going to see a step up in feed demand like we haven't seen in a long, long time. And I think that is the next couple of years, if we have an interview like this 2 years from now, I think we're going to be talking about how wild this feed demand consumption has been, how it ran over the market. The market didn't expect it. Throw in some weather volatility, and you have the makings of why we're so constructive of the grain market pricing structure over the next few years, because the best markets are when you get a step up in demand with some weather volatility. If you think of the 2000s, we had a step up demand by corn-based ethanol, and then we had some weather volatility that created a wild move higher in grain prices. We think this GLP-1 step up in feed demand and increases in weather volatility are going to conspire together, along with a weaker currency, which we haven't seen since 2002, sets up a really exciting period for the grain markets, which are your poster child for what everyone on the planet wants to be bearish this particular asset class right now. It is the most, as far as all the asset classes we see, I can't think of an asset class people are more bearish right now than the grain markets.
Yeah. Okay. All right. So late July, early August, you started talking to me about how you were going to see this was going to be the coldest winter in, top 50 years or whatever what number you told me. You told me it was going to be cold. And I was like, oh, great, Sean. That's awesome. Another cold winter. That's exactly what I'm looking for. And he said, well, where you live at, it's actually going to be warmer west. And it's going to be significantly colder, way more snowfall east. And it was going to play, a lot of games with natural gas and those kind of things. You look along there. And you were right. I mean, it's turned into that. It's been exactly what you said it was going to be. Good example of this, Saturday in Scottsbluff, Nebraska is supposed to be almost 55 degrees, if I remember right. From the start of the week, that was, in the teens, low teens, single digits. And I'm in Kansas City right now, headed to Springfield, Illinois, and it's going to be 30 degrees cooler there than it's going to be in Scottsbluff. So what you talked about's happened. Sean, as you look at this, as we head into February, the last report you came out, you were pretty sure February was going to be one of the coldest Februarys on record for top 5 cold that we've had in a while. Looking at February, planting season's not that far away. As you're looking at your crystal ball here, Sean, what are you seeing as far as?
Well, we had a top 5 cold December. We now verifying we're going to have a top 5 cold January. Everything is very, very clear that we're going to have a top 5 cold February. And everything is very, very clear to us that we're going to have a top 5 cold March, which means we're going to have a top 5 cold winter since 1950. Whether it's number 2 or number 3, those details have to be worked out. And it's still going to be center east, where most of the people live, where most of the heating degree days come from, is going to be where this is going to be, continues to be the focus. And we're going to continue to have aggressive snowfall, especially in the east, northeast. Another big nor'easter's coming up the northeast quadrant over the weekend, such forth and so on. And so if you look at the natural gas supplies here in the U.S., and you work at where I think we're going to wind up at the end of March, which is the end of the drawdown season, I think we could be looking at or below the lowest levels of natural gas and storage since we've been measuring this. So it's been a long time that we've been able to get the natural gas supplies down as low as I think we're going to get them down to. And what's very interesting is that Europe has had a top 5 cold January, and it looks like they're going to have a top 5 cold February. Their natural gas supplies are down to 40%. And it looks to me like, if you remember a few years back, they literally ran out of natural gas and they got to $100 natural gas. I think they could run out. They may get very close to running out again. So what does this mean beyond just the fact that natural gas prices certainly still would appear to have some upside price risks, at least heading into February? Okay. What it means is the US and Europe simultaneously are going to have to rebuild their natural gas supplies from almost, from very, very low levels, meaning a normal injection season is not enough. Like a normal season, you need to do more than the normal season, which means prices are going to have to stay high, much higher than they normally would be, to try to incentivize greater production, so that by the time we get to the next winter, we at least get our supplies back to the 5-year average. Whether the market is actually able to do that or not, that's the rub. And the LNG exports to Europe, Europe this past week said they're no longer going to be ever buying natural gas from Russia ever again. And it's set in stone, and they passed the bill and they're never going to do it again. So they're going to have to buy from us. So yeah, they're going to be buying maxed out LNG supplies from us for the rest of the year, trying to get their supplies, back up. So that's quite a scenario that we've, the last time natural gas price ran up, we had plenty. They did not. Well, if we both don't have enough, that's an interesting scenario, and it may cause a higher price plateau, because the last time we went up and we came straight back down. I think that we're going to go up, and we might need to trade a much higher plateau for a while until the market gets comfortable that we can actually turn on the natural gas again and get ourselves. Now, remember, this is all happening when AI consumption of electrical power is going up parabolically from all these data centers. And the majority of these data centers are going to be, in the near term, in the next couple of years, are going to be driven by natural gas fired new electrical power plants. So the domestic consumption for natural gas is going to, for domestic, it's really going to be difficult, Casey. I've always felt that all we need to do is get these supplies down one notch from a cold winter, and then it'd be very, very hard to rebuild them again with everything that's going on. The cold winter's happening. It's happened. Our supplies are going to get down, and I'm not sure, that we're going to be able to put. We're going to get. I am not sure we can put our supplies back in a comfortable spot with the AI demand ripping like it is. There's just those three demand sources: Europe's demand for LNG, our demand for electrical power demand, and just needing to extra rebuild for our supply. I just don't know that we're going to be able to do that anytime soon. And that sets up a very different framework for natural gas prices and the cost of electricity, which is everybody, I don't care who you are, where you are in the socioeconomic ladder, everybody consumes electricity 100%. Everyone's impacted by the cost of electricity 100%. It is something felt by all, and it's one of the greatest inflationary issues that we're going to have to be grappling with going forward. And this cold winter was exactly the wrong thing at the wrong time. Deep down, I had hoped the forecast would be incorrect, but it hasn't been, and it's not going to be. So.
Okay. All right. So you've laid out three pretty good scenarios where demand across the board for, whether we're talking proteins, whether we're talking grains, whether we're talking natural gas, all those different things that are out there. As you take a look across here over the next, because right now we're just barely, you look at supply, we're barely keeping our head above water on a lot of things that we're doing. Demand from other parts of the world coming in. Our corn demand right now is the best it's ever been.
It's insane. It's got nothing to do with China. Which is beautiful, and this GLP-1 demand hasn't kicked in yet. This is pre GLP-1 demand. So, yeah.
As you look at this, what are some of the catalysts that you're paying really close attention to? That if I'm looking at the market right now, what are some of the real catalysts out there that when you can point at and say, hey, this is the day that X happened or Y happened, and it's going to drive things? Like, what are you paying close attention to that you're like the road sign that's on the road that you're watching?
Just like natural gas, this demand base for natural gas has been growing and growing and growing, and we've been just staying ahead of it. And all we needed was one cold winter to just totally turn natural gas supplies upside down in demand. We just need somebody to have a bad crop. Not, and it doesn't mean it doesn't have to be a major crop problem anymore because of demand base. It just needs to be off. So whether it's Brazil, whether that's Russia, Ukraine, whether that's Europe, whether that's the US, whether that's China, whether that's India, somebody just needs to have, a crop that's a little off. And that's going to set the whole thing off. So the weak currency, the strong demand from GLP-1 drugs, the strong demand we already have, it's going to set the thing off. And so once you take that supply off the top and now you're chasing it, then all this negativity and this pent-up bearishness that's kept grain prices at historically cheap relative value prices immediately re-rate higher, like we've seen in precious metals, and like we're starting to see in natural gas. So when I look out ahead, to what we're looking at here, we are currently ending a weak La Nina. We're going to be converting to a weak to medium strength El Nino by the fourth quarter. And that El Nino is going to continue through probably next summer-ish, the following summer, okay? So what does that mean? That means that when you go through a conversion from one to the other, there tends to be an increase in weather volatility. In the U.S., so long as the El Nino doesn't arrive by spring, you tend to have dry, warm weather in the middle of in the month of July. You tend to have very dry weather during the spring for where winter wheat is grown. And obviously, we're going to continue to have winter kill frost risks well into the spring because with this pattern that we're in does offer greater risk. So the way I'm looking at it is I think the first thing that sets this off is winter wheat supplies coming off from dry weather and winter kill threats here and abroad. That's the first chip that you're taking the supply down that gets the markets uncomfortable. The second thing is that we get enough warm, dry weather in the month of July that it takes the top off the crop with I think we're going to plant 97 million acres of corn, give or take. Still a large number, but down 2 or 3. And 2 or 3, and if our yields are, let's say, slightly below trend, we would get a very, very tight corn market with the kind of demand that we have. And we're going to plant another very, very low acreage number on soybeans. So that would be chip unsupply number 2. El Nino historically is correlated in the following growing season in South America with very, very warm, dry central north Brazil, where they grow the majority of the soybeans and they grow the majority of the corn in second crop corn, which would carry over into the following second half of the growing season. Chip on supply number 3. What it also means is that India, Southeast Asia, and China, including Australia, tend to get into severe extreme drought-like conditions. Now, I know not necessarily someone like Australia necessarily is the biggest market mover around, but they do produce some pretty significant supplies of wheat and sugar and cotton. And obviously India, with their prolific rice production, prolific wheat production, prolific cotton production, sugar production, and obviously Southeast Asia is significant in rice production, in sugar production, and even things like Malaysia that produce significant palm oil production, in terms of how that's going to filter into renewable diesel and how much we can import and that sort of thing. There's just a lot of really important ag areas in the world that are going to see uncomfortable weather volatility chipping away at these supplies and chipping away. And when you ramp up demand through low prices, through weak currencies, and then you get a step up through a unique demand situation like corn-based ethanol was in the 2000s, or like GLP-1 protein demand and feed demand is going to be here over the next few years, you get into a situation where you fall just below, you reach the pivot point where then there's not enough, and then everyone just starts chasing it and chasing it and chasing it, and I think that's kind of what I'd be looking at. Look at the site. Look for winter wheat to be the first weather-related catalyst. Take some significant supply off of grains. The first one to excite the market. I know a few years back, winter wheat put over $1 on, and it's going to impact everything. You know what I'm saying? And just keep looking for chipping and chipping. Now, of course, one of these areas could have a major crop problem. Okay. I'm just saying just a little off, a little off, a little off, a little off. Nothing I've mentioned here is a major crop problem. Just chips. If we just get chips, we're going to get ourselves into a lot of trouble. If we have a major crop problem somewhere, it's a completely different story. And so we'll be watching very, very closely, like what happened this winter. If we start to get really, really strong signals that some region in the world could potentially be looking at a major crop problem, then all bets are off, and then things accelerate much, much more rapidly than what we're prescribing here. And so once again, and if I'm thinking through the livestock sector, Casey, everybody knows about cattle and how, that's kind of, I don't really see a huge opportunity in the cattle market, just as high as prices are. Obviously, this trend for higher protein doesn't hurt the cattle market, but in terms of an undervalued, underpriced, mispriced, misperceived market, I look at the hog market and I say, you look at the pork price and you look at the beef price, and I understand why. But if we're going to be moving from, 12% market share, that we're over half or 60% of these 60 million people, and a big chunk of people overseas are going to start checking these GLP-1 drugs, and they're going to want to consume more protein, and they're not going to be able to afford beef. They're going to consume more pork. I just think pork has so much room to the upside, that ratio between beef price to hog price, which is at a record ratio right now of expensive beef versus cheap pork, we could finally be looking at a renaissance period for pork demand to bring demand back into this industry that's been lacking for so long. It could be the demand thing that really catches everybody off guard. And if you look at the price of April hogs, just as an example, we'd like to look for chart patterns, these long-term wedge patterns that consolidate, kind of develop a coil spring. We had a multi-year wedge pattern complete this month, and hog prices have now broken out of that wedge pattern to the upside. Our experience and our history is that whenever you see a market spend a long time in this kind of a wedge coiling spring pattern, and it breaks either up or down, the move tends to be dynamic, significant, and longer term in nature. And we've seen that happen here in the last 2 weeks. So price is starting to verify thesis. We're guilty for sure of sometimes being too early or seeing things too early, or maybe you're not being patient enough to let the market tell you when they're ready to trade a thesis. So we've learned from our early years of getting our butt kicked by being too early that have a thesis, have a strong understanding of fundamentals, and have a strong idea of what would the price action need to look like to tell you your thesis is starting to be correct. And we feel the hog market is now giving that technical signal that price is starting to verify thesis. And so I think that's going to be an exciting area, that the market is totally asleep at the wheel. And I don't think anyone is prepared for what might take place there. We've seen, the cattle price make all-time new highs by a long shot. We saw the dairy price many years ago make all-time highs. Maybe it's the hog market's turn to go make some new all-time highs. I think the all-time high ever printed, was $1.30, something like that, give or take. Don't quote me on that, but I think it's around $1.30. There's a recipe here for that to potentially occur over the next 12 to 18 months, if our thesis is correct. So,
right on. All right, Sean, good stuff as usual. If folks want to reach out to you and get more information about what you're doing at Hackett Financial, what's the best way to do that?
Our website is Hackett, Hackett advisors.com. We also have a Twitter page at Faradix11, a LinkedIn page. We do put some information out there in interviews that goes over some of these statistic cycles and correlations on weather and other factors that help our customers and hopefully help those watching your great show, hopefully make better decisions wherever they are in the food chain and agriculture.
Right on. Well, Sean, I appreciate you being on the podcast. We'll catch you again next time.
Sounds good, Casey. Always a blast.
All right. Stay tuned for more Moving Iron podcast after these messages.
Well, there they are, mocking you.
See you next year,
Loser. That weedy area that's got you thinking, man, I hate that spot. Wish I'd sprayed better. Get the last laugh with a sprayer upgrade from John Deere. Precision upgrades that can increase your sprayer's performance, like ExactApply, advanced nozzles to give you more control at more speeds. It's just one of the many precision upgrades you'll find at johndeere.com. Now, let's see who's laughing.
All right. Welcome back to Moving Iron podcast. Got Aaron Findle back on site. What's happening, Marketplace? Aaron, how you doing today?
Pretty good considering what happened Sunday afternoon. I guess the sun came out Monday morning, so another day. Here we go.
You only left 12 points of field goals on the board, on the table out there.
9 for sure. But here's the thing. It really doesn't matter if you hold them to 10, you got to win.
Yeah, that game.
In theory, the game should have ended 10-3. They kicked that field goal on 4th down. And then the whole second half, nobody has any yards or moves the ball, so it's 10-3.
Right.
If Stidham doesn't give them that touchdown.
The backup had a fairly decent game for the first game he's ever played in the NFL, with the exception of the other 4 scattered out throughout the 9 years he's been in the league. Well, for the most part, I mean, it was a defensive game. You know what I mean? It was
for sure
played good, you know. It's hard to kick 45-yard field. I was watching that game, and the guy were they're catching punts, and I don't know how that guy could even see the ball. Because the wind was blowing too, so you could see which way the wind was blowing. So there was one time, I don't remember which team it was. They were going to catch the other team was punting, and the guy was standing at the other end trying to catch a punt with 30-mile-an-hour wind blowing in his face.
Yeah, and it just moved.
And I'm like, oh, so yeah, tough conditions. 2 good games though. Both games were good.
It's funny to me, the Broncos are, famous for snow games and all that. And the snow affected them more negatively than it did the Patriots.
Yeah.
It was like, neato. But here's the good news. I got my Sundays back, so to the shop we go.
Yeah. You got that was a tough game. A lot of things that could have went. They kind of bounced around there a little bit. They could have called if Mitch Miyagi could have came in and went like this and then fixed Bo Nix's ankle. You'd have been in the game,
Yeah. But here's the deal. It's only Peyton's 3rd year. It's Nix's 2nd year, and they're in the conference championship at home. They're a little ahead of schedule, so all good.
They're doing good. It's going to be, they get their stuff together and they'll be regrouping.
He's coming up while Homies is going down. See you, buddy.
We'll see next year.
Got the enemy back. Ooh. They're going to go get Tyreek Hill and pretend it's 2020? Which if Tyreek has anything bad, leg would be the biggest red flag.
Be the worst thing.
What's your purpose? I run a 3.840. Sometimes you can't even see me till I get to where I'm going.
I get speeding tickets in school zones.
Yeah. He actually could. He's been clocked at 24. I'm going to give you a warning this time.
Yeah. That'll be a lot of football to play next year. Be interested to watch how everything's played. I read an article today about, what's his name? Mark Cuban. I don't know if it's true or not. Mark Cuban offered Fernando Mendoza $40 million to come back and make one more run, and he passed to go to the NFL. Which I'd have been like, I feel like I can make this work for 1 more year for $40 million.
That's what's wrong with college football, dude. He's going to take a pay cut in the NFL. That's why these kids won't leave.
You got to think about that. That $40 million deal for him is like year 5 in the NFL.
No, I know that.
But that's what I'm saying. Like sooner or later, the NFL is going to go back and get rid of these rookie contracts that they've had.
Yeah, they're going to have to.
NIL came along, right? I mean, up until NIL made perfect sense. Now you're like, the NFL is like, well, we're going to get this 27-year-old rookie to come in, and he's got about 5 years left to play in the NFL, and then we're going to call it good.
In a way, the portal totally sucks for high school kids, just point blank. But for the guys that are already there, the portal is making everybody older, which honestly for the NFL is a huge benefit. Because they were on track there. They were having to put in lower, like bottom age limits. And you have to be, remember, like 10 years ago, you got to be in school for at least 2 years. And you have to be enrolled for 3 years, play for 2 years. So the earliest you're getting to the league is a redshirt sophomore. That kid today, I don't know, 40 million might not pull him out of college.
Right.
Yeah. 10 years ago, we were begging kids, stay in school, finish developing, all this. And now you're like, how are you still in college? You told us to stay.
Well, they're all Jason White now. Jason White.
Yes.
I think he was 32 when he finally played his last snap of college football.
Jason White, Brandon Whedon.
Yeah.
Who was Florida State? Winky.
Chris Winky, yep.
But those are all baseball guys, so that's all different.
They played yeah. So a lot of stuff, a lot of things moving there, but we'll see what happens. I think it's going to keep. I will say this: I think that has spread out the talent level to where there's a lot more teams out there now that were in specific conferences, right? Like Big Ten's a great example of that. Indiana was everybody's homecoming team for about 60 years, and now they're not. Like Vanderbilt in the SEC, again, that was everybody's homecoming team, and they just about made the playoff. So you start looking at all these schools, the ACC now, you start looking at some of the ACC schools that typically weren't, that were living on tradition, that don't have the deep pockets. You can tell which ones those were, like Clemson, for example. I would say they don't have the deep pockets that everybody else has, or they would wouldn't struggle along like they do. So I don't know. It's interesting to watch how it plays. The whole Notre Dame thing, I think, is I get they want to pretend like they're in the ACC, play an ACC schedule, pretend like they're in the ACC conference without being in the ACC.
What really matters.
So it'll be interesting to watch how it plays out. But it's all. I think the money thing is one thing about college football that's changing the way people look at stuff, but it's also making Saturday afternoons a little more interesting to watch because they're not as, you're not going to, like Florida State's not going to line up against Appalachia State and beat them 97-6, right?
No.
Differences there.
And it's much like the meme you see about Alabama. The reason everybody else caught Alabama now is because everybody's paying players. That's why the Southeast, that's why the SEC is down, everybody else is up.
Yeah.
It's illegal. Shit, we'll all do it now.
That's what.
You did a good job today, Timmy. Here's an envelope for you.
Yeah. So it's going to be fun to watch it play. So we'll see what happens there. Let's jump over and talk about what's happening in the marketplace right now. A lot of dynamic things are happening. If you look at where things are headed, the marketplace is continuing to show the speed and velocity of that 3 to 5 year old stuff. Just keep watching that stuff move around. I can't point to any one thing that shows. Obviously pricing makes a big difference when you're selling stuff. Obviously, that's what's there, but there's more disparity between prices from the top to the bottom now. If you go out and look at a website and you take a look at where the most expensive one is and the cheapest one's at for a specific year, make, model, and hour range, there's still a big spread in there. So as things continue to move along, you're seeing less machines come back in on the trade side of it just because of the amount of new equipment coming in. You're starting to see that contract. So I watch this right now, and I'm looking at if you're watching things kind of unfold and how things start to take place, there's going to be tighter and tighter inventory levels out there, which I'm not saying is going to drive up prices. That's not what I'm saying at all. What I am saying is what's available is what's available. So at that point, you have to start looking at where's the inventory at. There's on the farmer's yard, and then it's out at the dealership. And those two things are going to start competing for each other. And you watch stuff sell at auction, that 6 to 10-year-old stuff, which is typical stuff you see at an auction. 8 to 12-year-old stuff, typical stuff you see at auction. You're still seeing that stuff selling, and it's holding its value. It's doing good. So as I watch this, I see the market getting a lot healthier, and we're starting to see, like we've been talking about through 25, but roll through 26. It feels like we're starting to turn that corner a little bit as we head into spring buying season.
Yeah, I would agree with that. Nobody anywhere has this huge influx, the next wave coming. Finally shut the valve down, and okay, here we go. Now everybody can breathe and tread water, see where we're at. That's very true. And I think you'd have to be insane to think it's going to push anything up price-wise. And there's not going to be any such thing as the scarcity premium like we talked about during COVID and tractors. But you are right that there's, what you see is what's there. There's nothing else coming. It's here. So now, what I have noticed, and I don't know if guys are, well, they're probably listening to this podcast, so they're very well informed. But like guys realize that, and oftentimes I'm gonna say from not knowing the guy exists to wrapped up a week is kind of typical. Talk maybe once or twice early week, and then think on the weekend, call you, wrap it up Monday. That happens a lot of time, but it has sped that up. It really has with guys. It's funny that this is the topic because I think I heard that twice, maybe once yesterday and Friday or Thursday, Friday, whatever. But it was, we're looking at it, it's like the same mantra. We're looking at a few, but there's only so many. So we're going to decide pretty quick, and that's where it seems that's where the current buyer mentality's at.
Yeah, I think you're up against that. If you found what you're looking for and it's what you want, you need to start making moves on it because there's not that many of them, just like we talked about, and it's going to continue to the competition out there for those machines is going to continue to grow.
For sure.
So, but this is something else that I've been watching happen, and I'm curious to hear your point of view on this. But as I watch this kind of happen and things play out, is order writing period for 26 isn't going to change 2027. Right? So it isn't going to change in 2026 order writing period, right? So what we have coming in the 27 selling year, in 2026, late 26 into 27 1-year-old model stuff that we see coming in, that's not going to really change what we see happening now. I mean, I don't think order writing period for 26 is going to be any different than 25 was.
If anything, it's going to be less.
Yeah.
It won't be more.
Yeah. So that's going to further put this inventory situation into and by no means, me personally, when I look at the inventory that's out there, I don't think we're headed towards any kind of a disaster at all. I think we're heading towards a right sizing of the overall inventory, right?
Right.
For so long, I mean, 12, I think inventories were in pretty good shape, right? Overall, like as far as the amount of inventory on the market. Post 2012, after all the 2011, 2012 stuff came in on trade, kind of launched that 13, 14, 15 timeframe, right? That's when inventories really exploded. If you really go back to what
12, we didn't have any crazy run up.
Right. It was all
like 12, 13 created, and what would it be? 21, 22 or 2021? we didn't have any of this. Everybody go to town and buy new. And we did after both of those. So, and thus far, granted, this one was, I mean, if you really look at it, like the 11-13 peak was fairly sharp. It didn't feel sharp in the moment, but in reality, it was fairly sharp. So if we look at what we're currently going through, it's even sharper. It was literally, it wasn't a peak. It was just a one-sided mountain and then straight. Like it was done. That is it. So even though you have a far more drastic faster drop off this time, they are somewhat mirroring themselves. Okay. At the biggest number one problem in that glut was planters. Okay. And here's an interesting tidbit for you. That was when the S-Series Combine came out. Okay? So that definitely contributed to it. Ooh, go get a new Combine too. Because we got some money. Okay? So now we're on to this run-up. Another new model. The 8R tractors are at the same time. So we have everybody go flock to get that signature cab, you know? So it's funny that there's the planter. That was a natural thing. That was coming because everybody wanted to update a planter. They were just waiting for the right time. Everybody could afford to do it. Tons of planters on the market all at once. Same thing with tractors. We had the same tractor since 14, right? 3.6 comes out in 14.
Yeah.
And we're running that all the way to 19 and then 20. Ooh, here's the new model. If you can get
too, though,
you can get, and then that's what creates the tractor glut. So it's, and that's what it is. It's if we did not have, if the 8R had not come out when everybody's wallets are all the way fat, we would not have the product glut we do.
I agree with mostly of what you're saying. I think the biggest reason,
or it would be more balanced, I probably should say.
Well, but I think also the biggest run up in tractor supply was a twofold thing, right?
Is that where you go get some coveralls and a toolbox?
Had a couple of
different tractor supply.
I was driving that whole thing was what was the secondary market after that everybody wanted so bad? Everybody was out trying to find. I want a 250 horsepower 1-year-old or 200 hour 1-year-old tractor. I want a 300, you know. So what was happening? A lot of these bigger stuff that you saw happen, these bigger annual roll stuff that you happen. Well, hey, Mr. Customer, instead of you putting 700 hours on one tractor, let me give you two, and you put 350 on each one of them.
Right.
Or, hey, Mr. Customer, you put 1,000 hours on a machine. Let me give you 4, and you put 250 on each one of them.
Right.
That was what was driving that marketplace more than anything.
Well, yeah.
The amount of money that was out there was, hey, I don't want a 700-hour tractor, 1-year-old tractor, or 2-year-old tractor. I want a 250-hour one if I'm going to buy you, right?
When this hits 199, I want to see you coming down the road with the new one. You have Op Center be watching.
They have that was the biggest driving factor. What exploded marketplaces. Again, same thing. Well, even on the combine side of it, there were guys that would typically run 3 combines. They would get the 4th one to run in situations where they were trying to manage their hours, or they had 2 combines, they get a 3rd one, or they had 1 combine, they get a 2nd one. Like that, those kind of things were really going on because during that time frame,
the amount of farms who added a combine from 12 to now, because they were half price.
What? Yeah,
they were half price 14 through 19, and you could go get a 1,300 hour S whatever for nothing and add it in. And
look how many farms.
You got one 20,000 repair bill every winter. Might as well have 2.
Yeah. When you look at the farm, the other thing too, look at the number of farms through 2012 through about 2020 that went from relying heavily on the ASPs to come spray their fields, getting their own sprayer, right? So that jump there added to that, right? So instead of having, I'm going to go get those co-op guys and they put 1,800 hours a year on a sprayer, well, I'm going to, I need my own sprayer because, it's having with the amount of stuff the cost doing, blah, blah, blah. I can pencil it out and I can buy my own sprayer. And I think from 2010 through 2015 or 16, the amount of sprayers that I evaluated in that time frame probably quadrupled. I mean,
for sure,
4930 to R4060. I mean, all those different models that came in and everything was the biggest one that was out there, right? Get R4038s and 4030s and 4830s and those kind of things. But if they were a 1,000-gallon machine, or they were a 1,200 gallon or a 1,600 gallon machine, right? That was really what was driving the marketplace. But the idea that where the machines really jumped in inventory levels is when used demand switched from being like, I'm good with a 700-hour machine or a 1,000-hour machine to I want a 250-hour machine. I don't want a new one. I want 250 hours or 300 hours or 400 hours, whatever the number was. That's what really drove the marketplace and drove. Today, what you're seeing now is we're reversing that back.
Right.
Guys on the farm are going like, I'm the only generation.
Free combines.
I'm the only generation that farmed the same 5,000 acres with 6 tractors. Okay.
Right.
Right. Everybody else did it with 2. So maybe I can do it with 2 as well. Right. Like that's a conversation you see guys having, as they start working their way through and weaving their way through this. It's driving down the number of machines that people are ordering. It's also putting the stuff back on the marketplace the way it needs to be. To me, as I look at the inventory levels, as they start to line up, I think we're right sizing the inventory for the buying population that's out there. And I think that is driving the marketplace again. That's why I don't think we're going to see this huge run up in value that if you look at, because if you look at where people are buying stuff at right now, the 1 and 2 year old machines are, we're adding machines to that each month. We're adding a few machines to that, but it's not like, hey, we went to bed today, there were 2,000 tractors on the marketplace, and we woke up today, there's 5,000.
Right.
It's not that. We've had since, over the last 2.5 months, you put 300 row crop tractors on the marketplace. You know what I mean? 1-year-old machines. So, that's manageable, right? But the flip side of that manageability is now there's 1,000 300 plus horsepower tractors out there, all make all models. And if you're looking at where those play in, those are they're higher valued machines. So that is a different buying population than the 3 to 5 stuff that's flying off the shelf right now.
Yeah.
But like you've talked about earlier, like you've talked about since, I don't know, October, November timeframe, stuff that's the 3 to 5 year old guy to me is I'm having to do some of these things because I need to upgrade my machine because I'm beyond either what I want to spend on it, or I'm beyond the hour range that I feel comfortable with, or whatever it is. Like that's where that's coming from. It's not necessarily like, had a great year, I'm going to go upgrade my tractor. It's a lot of that driving force is there. That being said, the amount of combines that are coming off the marketplace too also show to me that the amount of how far behind in a lot of situations guys got with their trade cycle on combines. Because it's the difference between a row crop operation and like a cattle operation is that tractor's a tractor, whether it's a loader tractor or a tillage tractor, whatever, plant tractor, whatever it is. It's the ground engaging or a lot of moving parts type stuff like combines, choppers, cotton pickers and strippers, like all those different things like that if you get behind the curve on those machines from what you feel comfortable with, what your normal cycle is, those repair bills on the back side of those things where the reason that you're trading and things that you're doing, when you get on the other side of that, there's a lot of guys that are really like, man, I did not expect to pay X dollars this year in maintenance costs.
Right.
And that's driving some of this trading stuff too.
For sure. To piggyback with that, I would say your combines are being driven for sure being driven by the 3 to 5 world, because that's your buyer. And if he's got a 3 to 5, that means he's got a high dollar one, right? He's not in the, 5 to 8 where they hadn't ramped up yet. So he's got that high dollar one. He's looking at a high dollar one. it's like that's when you relearn how to sell, one of those deals. So that guy's really driving the combine world right now. The 6 to 10 is driving the tractor world because there's still plenty of the 3 to 5. There are enough, just enough maybe, for these guys to go out there and grab 1-year-old. But that 6 to 10 is the segment that is the hardest to digest right now. Because you have your older 8,000 R series in there, your older Magnums in there, and those are rigs that are last 6 months really starting to feel that pressure from the top from 18 months ago. You feel it in that segment the most out of anything. Because your 3 to 5 is right. You've been tweaking it and adjusting it, for a couple of years. Finally got it kind of dialed in. Your 1-year-old is what it is. If it's there, it was most likely a pre-organized situation to get that trade, right? Rolls and whatever. But that 6 to 10 is taking a hit, and it's feeling that squeeze hard. And there's a lot of those tractors out there that are not, and I mean in inventory, dealers that are not ready for that, because so many, talking to dealers across the country, and this all started with the very end of Scarcity Premium and the start of Glut with, these were a hot deal just a little bit ago. We could put a little more in it to move this one. And you keep doing that and you keep doing that. And then your 6 to 10 bucket is once it all comes down. And there's a lot of guys in that realm right now that are feeling that. The good news is it's far less painful on a per item basis than the front side fix could have been, would have been, is. So that's a big factor in it. As far as sprayers go, what I'm seeing the most of right now is the hours. It's funny, we were talking about that. I want a 250-hour sprayer. No, I want under 2,000. The biggest thing now, and you'll appreciate this, Puck King, is guys calling. I need this size of boom. At least this tank has to have ExactEmerge. I don't care what model number it is. I don't care what the cab is. That is my entry level to upgrade it to where I need to be. And that's what's doing it. If you have and we have one, I can think of, twice last year, I literally had guys call and I need a sprayer and I do not want ExactApply. I don't know why, but there's still those guys out there. And we all know me. I like black coal smoke and levers, right? But
you do. Yeah.
But at the same time, it's like that baffles me a little bit, because if you're making that jump, get what you can get.
Right.
Yep. Now, there are other instances. There are certain products, that kind of thing, where maybe that guy had trouble. I've heard of that. And I need a sprayer, man. That's it.
Right.
I
talk about upgrade kits all the time, and why I think they scare me as much as they excite me. You know what I mean? And the reason for that is, if you look at I'll just use a planter, for example. The amount of planters that are coming off the marketplace right now, every single segment of planters, 1-year-old planters, 2-year-old planters, 3 to 5-year-old planters, 6 to 10-year-old planters, 10+-year-old planters, all of those planters show they've reduced their inventories from all the way down the board. Now, number of reasons why, whatever else. Well, let's just hypothetically say all these guys are coming in now. They're buying the planter that they want so they can go out and upgrade it, right? And then let's just say that they're doing that, right? All of those guys are forever out of the market. They're never coming back in unless they want to go through do it again, right? But if you're in the mindset of upgrading your planter, unless you do something to the bar that completely just tears the bar up, all you really need to do is upgrade what you have over and over and over and over again until the bar wears out. And then you have to get a new bar, right? But at that point of time, when they do that, they're like, why would you ever come back to the market to get another sprayer or another planter? Now, a sprayer, on the other hand, sooner or later, you're going to be like, do I really want to put a new engine in it? Do I really want to put all new wheel motors in it? Do I really want to put a whole new hydrostat in it? And at the meantime, you have, you got a Frankenstein over here that you're trying to just piece together to keep moving down the road. But all that during that whole time frame, you have the latest technology. Now, you go in, put all 4 new wheel motors in, you put a brand new engine and a hydrostat. You start looking at some electrical stuff and those kind of things. Like
that's called trading sprayers.
That's my point. Like at some point in time, like you've done so much that you're like, do I keep riding this train or do I do something different? Yeah. But I hate to say that, but I think that's kind of what will happen. We got a 12 row set over here in pallet lot number 1, 2, 3, 4, 5. We got 12 rows over here going. This setup is upgradable to Gen 1 technology. So can't go to Gen 2, but we'll figure it out. That's the kind of stuff that they're talking about. So it'll be, we're headed to something that's different. And another thing about on the sprayer side of it, and last thing I'll say about this is that, you can go put a new engine. Yeah, you can do the wheel motors and those kind of things. But there comes a point in time when you start looking at metal fatigue on a sprayer because of what you're doing with it. I mean, the corrosive nature of what you're selling or what you're spraying out of the back is going to take its toll on. And I've seen some sprayers come through before where I'm like, you start looking at it, I'm like, wow, the frame rusted out. And they used metal beams on each side and welded them together. This looks like it's safe. We should use this. You know what I mean? That's right. But anyway, so good place to stop, Aaron. Folks will reach out to you. Get more information about High Plains Wholesale. What's the best place to do that? Right on. Casey Seymour, find me on Facebook, X, Instagram, LinkedIn, wherever else I'm at. I think TikTok. Find me there. You can find the audio version of this over on the Farm Journal Ag Web podcast section. You can find it there. You can also go to Farm Journal's YouTube channel. You can find it there as well. And you can see everything that's there going on, all the stuff that's there, and all the other great podcasts that are available through the Farm Journal Network. So with that, I'm Casey Seymour. Move Smart, folks.
Thanks for joining us. We'll see you again next week. And remember, Moving Iron is available on Farm Journal's YouTube channel and anywhere podcasts are found. So until next time, let's move some iron.